we heading for a housing market crash this year? While it's all a bit chaotic, there are some underlying explanations, and the immediate future may not be so rosy. Housing market chaos has resulted in even the top industry experts changing their projections. To know more about it, keep watching the video. I also have a bonus tip for you, so stay tuned till the end. Without further ado, let's get started. First of all, what is a housing market crash? A housing crash typically follows a housing bubble, a market where the average price of a home is much higher than its value based on underlying fundamentals. This can occur through excessive lending that is not immediately noticed by the market. The financial crash of 2007 and 2008 had a persistent and dramatic impact on the price of homes in the Western world. House prices fell 7.1% in the fourth quarter of 2008 in the US, then by another 7% in the first quarter of 2010. In the UK, house prices fell by as much as 15% between 2008 and 2009, which was a shorter, deeper contraction than in the US. But it took the UK until 2014 to recover losses and reach the same level as average prices in 2007. Since the pandemic began, housing prices have gone up and interest rates have risen. Some changes have been purposeful, while others have been outside predictability. Even experts in the field have changed their predictions regarding the housing market over the past few months. Not surprising, as the numbers in front of us seem contradictory. Mortgage interest rates are down, and home builders are slowing their pace despite a housing shortage. Since the beginning of the month, while the Federal Reserve continues to raise rates, interest rates on mortgages have dropped. This can be due to demand as home prices remain stubbornly high, and interest rates skyrocketed from an average of around 3% at the beginning of 2022 to over 7% in October. This has led to fewer buyers in the market, since finding an affordable home has become increasingly challenging. Mortgage lenders also have to worry about the bond market, as mortgages are often repackaged into mortgage-backed securities on the bond market. Investors typically look for these securities to beat the 10-year Treasury bond yield and inflation. Mortgage rates are usually around 1.8 percentage points higher than the 10-year Treasury bond yield. But in 2022, they climbed up to 3 percentage points higher due to factors like inflation and the Federal's decision to no longer purchase these securities. While rates have come down now, they haven't cooled enough to coax buyers back into the market. At the beginning of 2022, you could find a mortgage offering a 3% interest rate on a 30-year fixed mortgage. In October 2022, Goldman Sachs predicted a 5% to 10% drop in home values between November 2022 and March 2024. This prediction is the result of not enough affordable homes. This means that not as many people can buy them, especially with the interest rate being so high. But this was an abrupt change from its September 2022 prediction that housing prices would stay stable over the next 12 months, maybe with some regional drops that would level out. It's important to remember that predictions are not always accurate depictions of the future. So much can happen to alter the outcome, sometimes over the course of a single week. The Goldman Sachs model has home prices rising again after March 2024 at a more measured pace through January 2026. There are a few factors in the American housing market that are keeping a rougher outlook at bay. The housing shortage is likely to play a large role in home prices because America has had a housing shortage problem. Even in 2019, there was a shortage of 3.8 million residences available for sale or rent, and the COVID-19 pandemic exacerbated these problems. First, with a lack of income at the beginning of the pandemic, many people lost their homes. There was an eviction moratorium, but not all properties qualified for it. Also, the moratorium went on for so long, many mom-and-pop landlords could no longer afford their mortgages. These landlords also couldn't evict, so most of them chose to sell their properties to better-funded corporate landlords. And once sold, the tenant could be forced out. As you know, despite being better resourced, corporate landlords are less likely to be forgiving when it comes to evictions or late rent histories. They're also more likely to increase rents to maximize profit, making housing even less affordable. Sadly, this meant that many people who lost their homes during the pandemic still can't find an affordable place to live. As home prices rose during the pandemic, more soon-to-be homeowners who were in a better financial spot got priced out of the market and decided to continue renting. This further aided the housing shortage issue as fewer people were rotating out of the rental market. In addition to these issues, Supply chain problems during the pandemic caused a massive slowdown in new builds. Labor shortages furthered the issue. The solutions to the housing shortage problem are varied and regionally specific, so there is no one-size-fits-all solution. Since it's likely to continue being an issue, there will be more demand than supply. New building permits were down 2.4% in October 2022 from September 2022 and 10.1% year-over-year. New housing unit starts were down 4.2% month-over-month, whereas new housing unit starts were down 8.8% year-over-year. Home completions were down 6.4% month-over-month, and new home completions were up 6.6% year-over-year. Since home sales have been down since spring 2022, many home builders are not planning on keeping up their pace. This means we could reasonably expect the housing shortage to further in the future. Surging mortgage rates have put pressure on the housing market in recent months after home prices hit record highs across the nation. But as mortgage rates have begun to decline in recent weeks, many economists are mixed about whether home prices will continue their slow decline through 2023 or even crash. Still, the nation's overall housing supply remains limited, and the tight inventory has kept prices from seeing deeper declines, making homes unaffordable for many, especially first-time homebuyers. How far will home prices dip in 2023? This depends on where mortgage rates go. Many housing insiders are warning buyers against trying to time the market as the economy wades through its current period of uncertainty. Housing experts are maintaining a watchful eye on the economy, which is still being pulled in all directions by stubbornly high inflation, steep interest rates, and ongoing geopolitical uncertainties, to name a few. After a recent couple of red-hot years for the housing market, there are indicators a correction is underway, but it's been slow going. Total existing home sales dropped 5.9% from September to October 2022, marking the 9th consecutive month of declining sales, as home shoppers were squeezed out of qualifying for a mortgage. But that could turn around soon. Homeowners and investors are bracing themselves for a potential housing market crash after 2 years of relentless growth. House prices have also declined in the UK, Canada, and other major economies as higher interest rates and inflationary pressures dampen property demand. Now onto the bonus tip. How can you sell in a hot housing market? Remember, the first step for a successful sale is to find a listing agent who knows the area and is highly recommended, because a good agent will price your home competitively while fielding questions and offers from prospective buyers. Even though the market may be tipped in your favor, it's in your best interest to present your home in the best possible light. Declutter, organize, and clean, because a clean space gives buyers a chance to envision the house's potential even if your home is outdated. How can you buy in a hot housing market? Start with a budget and stick to it, because even with a slight uptick in the number of homes for sale, buyers are still facing elevated prices and mortgage rates nearing 7%. And the biggest thing right now is the disconnect between buyers and sellers, as buyers want to lowball and sellers want last year's price. While you are getting a bit more breathing room as a buyer now, keep in mind that it's still a seller's market while they consider their options. Just weigh your goals and budget and go for it. So that's all for today, guys. Will the housing market crash? Or, as some experts are saying, is there no chance? What are your thoughts on it? Let me know in the comment section below. Make sure you give this video a thumbs up and subscribe to my channel so you don't miss out on the fantastic financial content. Until next time.